Guys? What's up guys, welcome back to my channel. Right, so today I'm back with another strategy that we can actually use to trade from 1000. Right, that we can use to trade from 1000. Right, so the strategy I'm actually going to be explaining how we can actually scalp. Some have built up the opinion that the pattern does not work on boom and crash. All these bullish flag, cup and cup and cup and shoulder, or what do you call it, head and shoulder flag, bullish flag, bearish flag, all these triangles, symmetrical triangle, wedge, edge and fall. And so I'm actually going to be explaining how you can actually trade those patterns on boom and crash. Right, some have built up the opinion that do those patterns really work? Do they really work? But as a matter of fact, the best pattern I've actually seen that works perfectly for boom and crash that I trade is the M and the W pattern, and also the V. Right, so for the pattern I'm actually going to do justice on the pattern now, because the major pattern I've actually seen that works perfectly on boom and crash has always been the W pattern, the M and W, and then we'll have the V. Right, we'll have the V pattern, and we also have the A pattern. Right, so these are been the pattern that have actually worked perfectly, that I've actually tested, and it works perfectly on boom and crash. So I'm actually going to be doing justice to how you can trade this pair, how you can trade these patterns profitably using boom and crash. Right, using boom and crash. So to actually be very proficient, very profitable and efficient in trading this pattern, you might really find it very difficult to identify on the main chart if you are not really, and maybe your experience is not really that wide and you've not really mastered the craft very well. So actually make it very simple and fun by adding some indicator that we're able to see those patterns for us easily. So meanwhile, if you are here to subscribe to my YouTube channel, please do well to hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. Right, so, and at the same time, please, I would actually beg you, please, as you like the video, that you comment, please do well to share. You can share to as many people as possible. You can share on Facebook or share on Telegram, share on WhatsApp. I would definitely appreciate, and you can share on Twitter too. I would definitely appreciate. That would be the best way you can actually help back the good, the if really will actually been able to help your trading career, will make you more profitable with our strategy. So the best way you can actually return the favor back is by sharing this content as many as possible. You can actually even share it on your WhatsApp status, on your Facebook status, even Twitter. We do appreciate it very well. We're definitely going to appreciate it very well. So the pattern that I actually said we were talking about are just three or two, right? And we can call it four, because we have both four. We call it four in time that we can actually talk about the bullish trend, the bullish version of it, and the bearish version of it. Will make it four. Right, but ideally there are two patterns that I've actually seen that works perfectly on boom and crash. Right, it's not as if all those head and shoulder, double bottom, double top, it works. She understand all this call head and cup, or what do you even call it? It works perfectly. But the one that I've actually tested and I can beat my chest on it, that is these four patterns, which are the W and the M, and we have the V and the A. Right, so I'm going to be doing justice to this thing. So the best time frame you can actually see this is going to be on our 15-minute or our 5-minute time frame, to be very efficient. It's not as if you can't find it on 1-minute time frame. Of course you can find it on 1-minute time frame, but if you really want to filter the noise in this, with this strategy, with this method, I would strongly advise you stick to 5-minute time frame. With that, you can actually be able to filter the noise in the market, and you trade this pattern profitably, and you are gonna appreciate this. So without wasting much of your time, we're actually going to be using indicator. We are going to be using that is going to make this spotting or seeing this pattern easily for us. So, like the first indicator we're actually going to be using that we're going to add to our chart to actually make the spotting and trading of this pattern very easy for us is going to be. So, for those of you that are actually new to trading, right, you can actually click on this F here, right, and you can just tap on your screen. You will actually find what's the F here. So whichever one that is convenient for you, just click on it. So you click on this F, right? So I've added the indicator on our chart, right? So the first indicator, now we are not using any indicator on our main chart. We are strictly not using any indicator on the main chart. So it's just going to be the what the it's just going to be the what it's just going to be the indicator window alone. It's going to be the indicator window alone. So it's just going to be the main chart alone. And for easiness, I can actually still delete all those indicators, then I add it back, so that for those of you that are new to it, right? So once you click on this F plus here, click on this F plus here, then the first indicator we are using is our moving average. So look for your relative strength index. You click on it, right? So the period is 14, apply to close. The style is 3 pixels there. You can use any style of your choice, but the level we are going to be using now is going to be the 20 level, the 80 level, the 50 level, the 32 level, and the 68 level. So these are the 5 levels that we'll be using. Yeah, these are the 5 levels that we'll be using. So the 50 level, we can actually make it our partial entry or take profit entry or exit, right? So and why the remaining partial entry or partial entry, all right, we can have a partial entry, right? Why the 20 level, the 32 level are buy levels, then the 68 level and the 80 levels are they're also our sell levels. So once you are done, you click on done, right? You can see this is what we have on our chart, right? So you click on this F plus again, right? So you click on this F here, F plus, you click on this F here. So you click on this F here, F plus here, and not this, right? And not this, because we are not using anything, we are not adding any indicator on our main chart. It's strictly our indicator window one. So you click on this F plus here, and then you look for our moving average. So the first moving average we're actually going to be using is the period is 2, shift is 0, method is simple, apply to previous indicator data. Please take note of this. This is very, very important. Right? It's very important, right? Take note of it. Apply to previous indicator. That means you're actually applying the whatever data this moving average is going to fetch for us is going to be based on the first indicator data, which is our previous indicator, which is our relative strength index. So take note of it. So once you are done, you click on done. Once you are done, you click on done. So the final indicator we're actually going to use is going to be our moving average, but this time around now the period is going to change. So we click on this moving average. So now we are now using we're using the period 7, then change the color to red. So once you are done, they apply to indicate previous indicator data, right? Take note of that. So once you are done, you click on done. Right, so finally this is what we are going to have on our chart, right? So now let me explain how you're actually going to use it. So remember that earlier I said that the first pattern we're actually going to be trading is our W and our M. It works perfectly now. So I'm actually using boom 1000 for this now. So for boom 1000 now, we actually use it to catch spike. You can use it to catch spike, and you can use it to trade the reversal pattern, to trade the reversal, which is actually the sell. Right, so if you are taking the sell, if you are taking this buy now, right? If you are taking the buy now, you can actually see at this area now we have our W, right? We have our W pattern. You can see you can actually spot it very well on our what, on our indicator window. This is the first leg and this is the what, this is the second leg. You can see a very perfect one. So the moment you have the first spike, right, the moment you have this first spike here, you can actually enter here, right? You can see the first spike, right? That was what confirmed what the second W for you. So now to filter the noise in this indicator now, right? So what we'll use is that now this is where the levels that we have on our what, on our RSI now comes in place now, right? To be at the safer side, since we're actually using the what, the 5-minute time frame. So if we are using the 5-minute time frame now, right, the first leg of this W, if it actually enter this 20 level, no problem about it, right? But if it doesn't enter, right, once it's around what, around this 20 level, right, a perfect one will enter our 20 level, right? But whichever the case, once you have the second leg above the 20 level or above the 32 level, you can conveniently take the trade, right? You can conveniently take the trade, and once it hits your 50 level or your 68 level, you can choose to exit the market, right? You can choose to exit the market, right? So that is it. This is another example here. You can see this is another perfect W. Now, so if you find it very difficult to identify your W, right, on your main chart and even on your indicator window, now you can actually switch. You can switch your candle from line chart to line chart. You will be able to spot the W. You can actually see, right, this is multiple W. So if you miss this first entry here, you can actually re-enter there. As you can see, can actually re-enter here. So it's all about you taking your time to practice very well. This is another W here, right? See, this is another W here, right? So it's all about you just taking your time to practice very well, right? Meanwhile, if you are here to subscribe to my YouTube channel, you can do what? Please hit on that subscribe button and turn on the bell notification so that you stay updated each time I'm dropping a new content. And please do well to share with friends. We really appreciate that, right? We really appreciate that. So to be at the safer side, let me give you a pro tip now with this W, right? Let me give you a pro tip, right? So a pro tip I'm going to give you is that when you are 1-0, the first leg, right? For the first leg now, right? No, we have W like this. So for the first leg like this, the spike, right? If you are taking a buy, right, the first leg is always going to be a sell. Right? So the retracement for the first leg now is going to be a spike to the upside. And so once you have that, so the retracement here, I remember we're entering at the second level here, the second leg here. Right? So at least the retracement will be 10 to 15 pips. Take note, the first leg must be 10 to 15 pips, right? 10 to 15 pips. Right, so let's make sure those ones that we've actually taken now. This is the first leg. Look at the retracement now. You can see we have 17 pips. We have 12 pips, So that is telling us that okay, we can conveniently take the second leg the moment it forms at our power level here. That the moment it forms at our power level here, right? You can see we have 12 pips. So you can conveniently take it here, right? You can see your W here. And you can see that the first leg is this is 12 pips already. So you can take. So once the spike up, which is giving you the first leg, right? It should be between 10 to 15 pips, right? 10 to 15 pips. Right, this is the first one. Look at this one here. Right, look at this one here. This is our first leg, right? So you measure it. What do you have? So you actually take it down and we'll measure it here. Right, this is the beginning of it, right? And actually see we have 13 pips. So a pro tip is that if you are taking your M's or your W in the market, the first leg, right? The first leg should be between 10 to 15 pips. So remember to have that, you can take your entry. So for those of you that understand price action very well now, right, by the time you actually look into this now, right, by the time you look into this section here, right? Let me just analyze. This is our what? This is our higher high. This is our lower low. This is our higher high, right? So at this area now, if you want to enter, which is our second leg of our what, of our W now, for those of you that know your price action very well, institutional price action, you can put into consideration your order block, your break in market structure now. So if you actually want to identify this area here now, that you want to put your entry to minimize your stop loss and use a very word, because one thing SMC, one thing smart money actually done for you, that you can actually give us the time leverage to be able to use like 1 pips to 3 pips stop loss, and we will be secure in the market. So if you actually want to use something like that now, all you need to do is just for you to go back to this area here. This area now, let me mark it with a rectangle, and then we'll go down to, so what we'll do is that so what we'll do is that at this area now, this, remember that this is our lower low, and this is our break in market structure. So we're actually going to be targeting any other block that is around this area here, and that is going to be our entry. So what I'm going to do is that I'm going to mark this area out. I'm going to mark it out. Let me use my rectangle. Right, let me use my rectangle. So this is the area that I want to put into consideration. Then I will go to my lower time frame, which is my 1 minute time frame. So what I'm going to do is that now I'm going to, this is, if you actually look at now, this is the rectangle now, and this is my midpoint. So I'm going to drop an horizontal line at this midpoint here. Then at whatever other block or whatever PO that I'm able to spot at this low here, I'm going to what, to use it as my what, as my PO that I'm going to use to enter the market, so that I can reduce my stop loss. So what I'm going to do is that, let me just put an horizontal line there to signify my what, my midpoint of this range. So let me go to my 1 minute time frame. My 1 minute time frame. Okay, here we go. Right, here we go. So remember now that this is my entry area here. Right, this is my entry area. So the moment I have this now, I will actually have this on lower time frame now. On the lower time frame now, this spike here now, this is my what, this spike, this little retracement that I have here, it is going to be my PO high. It is going to be my what, my PO. So what I'm going to do is that I'm just going to mark it out with a what, with a rectangle, right? So I'm going to mark it out with a rectangle. So the moment price going back to this area, I'm going to what, put my limit there, right? I'm going to put my limit there, right? I'm going to put my limit there, and I'm going to use 2 to 3 pips stop loss. So if I'm using 2 to 3 pips stop loss, let me use my rectangle to draw the 2 to 3 pips stop loss. So you can see that we have 1.8, 1.8. Alright, so I want to use 3 pips stop loss. So that's 2, 3. You can already look up here. So my 3 pips stop loss will be here. Let me use the cross bar. So if I'm entering here, so my 3 pips stop loss, this is 1.2, right? This is 1.2, and this is my 2 pips stop loss. You can actually see. So that is what I'm going to be using. So we can see that they didn't even go more than one. How many pips they even say? 1.1 pips. Let's say 1.2 pips pipette with a 2 pipette. So that is one thing SMC has really done for us. That's one thing SMC has done for us, and trading pattern will have done for you once you understand your word. Now, to actually break this down, now you can see that we have a break in market structure here. So after this break in market structure, this spike that pick up, that break this market structure, all we just need to just wait for a retracement down to to our discount area, and then we can easily buy up. Right? So that is that. Let me clear all these things. So for crash 1000 now, let me do a practical example for you on crash 1000. So for crash 1000 now, remember on crash 1000 now, we're actually going to be taking the what, we'll be taking the reversal side of this. We're taking the reversal side of this strategy, right? We're taking the reversal side of it. That means we'll be taking the what, the M in the market now. So for us to take the M now, you can see that this is a perfect example here. You can see this is our M. You can see this is our what, this is our M here. Our M here. So all remember the same rules still apply. The first leg, the rotation of what, 10 to 15 pips. right, 10 to 15 pips. So once it's above that, you can actually take your what, can take your entry, that you can take your entry. So after 13 pips here, so we are good to go, right? So do well to do your back test very well. Do well to do your back test very well. I don't want the video to be too long. So if you actually need more videos about this pattern that work on what, that works perfectly on boom and crash, you can actually drop in the comment section whichever pattern you want me to do justice to, right? And if you still need more deep explanation about this pattern, one of the major pattern that I trade is the what, is the M and the W pattern, because they are very profitable. Once you are able to spot it, you are good to go. It can give you 50 to 200 dollars depending on your account size and depending on your risk management. So let's keep making Deriv, and meanwhile make sure you apply a proper risk management. Don't go and use a lot size that will kill your account, that will blow your account for you. See you guys next time.